What it do, YouTube? It's your boy Sabelo here, and we are having another video once again. In today's video, I'm going to be showing you all how you can make 100 pips on a daily basis very easy. Make sure that you watch very carefully as I'm going to be going through each and every step that you need to consider in order for you to successfully execute this strategy correctly. Before we get into the video, make sure that you subscribe to the channel, you turn on the bell notification so that you can be notified whenever we release videos like this. I drop videos at least twice a week. I make sure that on Sundays I provide you all with the upcoming week market analysis, and on Fridays I do a follow-up on the analysis that we taken. With that being said, let's get into the video. And we are on my trading view. As you can see here we having instrument GBP cap. So before I explain the strategy here, it's a very simple strategy. It's a strategy that we use when we are in a consolidating phase. Okay, so before we get into a strategy, allow me to explain just a few things that will make clarity as to how you analyze appropriately. Okay, so in the market we have two trends. We have an uptrend and a downtrend. Okay, so when we are having an uptrend, we are having a market that is creating higher highs and lower highs like this. This is a market the that is in the uptrend. This is the uptrending market. Okay, and then the other one, this would be a market that is in a downtrend or a bearish trend. This market will be creating lower highs and lower lows just like this. And always make sure that you remember that the principles that you apply on a horizontal resistance like this one, this would be our horizontal resistance. The principles that you apply on this resistance, they apply exactly the same on the diagonal resistance, which is our trend line that will look like this. So whatever principles or rules that applies here, like you need to see the market losing momentum as it is approaching this structure here in order for you to anticipate a reaction to the structure. That principle, it will also apply on the diagonal support as well, as much as it is applying on the horizontal support as well. And this goes for both trends. This goes for an uptrending market and a downtrending market like this. I hope that it makes sense and is very clear. And now that we have explained those two trends that we have in the market, we also have a phase whereby a market, some call it liquidity grab, um, some call it a consolidation phase. It is all the same thing here. Okay, this is when the market is moving sideways and it is stalling before it takes either a move to the upside or a move to the downside. And this is exactly where we are using this strategy here. Okay, so as you can see that here we would have our resistance level here, and we'll have our support structure here at the bottom. Okay, so number one, you want to see a minimum of 2 touches here. Okay, once you see a minimum of 2 touches, you draw in your zone, and then you also at the bottom you draw in your zone. So you see a minimum of 2 touches at the top, a minimum of 2 touches at the bottom. Once you have identified the consolidation phase, and then you will be looking for the market to hit this next the third reaction to that zone, and this is where you will be looking to capitalize. So we know that this market is stuck between these two zones for a certain period of time that we do not know. We don't know as to how long is it going to take. Okay, so what you want to do is you want to catch the market if it is at the bottom at the support structure like this, and this will allow you to have a very small amount of risk while targeting a very huge take profit like this. So you would catch the market when it is here. As soon as it hits your take profit there, you also be looking for shorting opportunities from that structure right there, and that will allow you to easily make a hundred pip on a daily basis in a market that is simply moving between two significant zones. Okay, now that we have explained that, let's get into our real chart so I can give you a real life example of this. Okay, so you'd want to find your consolidation phases on 4 hour or 2 hour in order for them to be significant, and they can allow you to catch those 100 pips easily. Okay, so we're going to be shifting on a smaller time frame after identifying them. Okay, so we can see that this was a consolidation phase here, and this also was a consolidation phase right there. Okay, so let's start with this one here and make example out of it. Let me just remove this line here. Okay, so we can see that we are on a 2 hour, sorry, we are on a 4 hour time frame here, and we have this consolidation phase that is kind of unclear on a 4 hour. Okay, so you would highlight your resistance level like that, and then you also highlight your support structure like this as well. So once you have those configured like that, you want to switch to smaller time frames. Okay, you switch to a 30-minute time frame or a 15-minute time frame. Okay, so now we can see that this market initiated this consolidation here. It hit the structure. This has our resistance, and then our support, and then this area here would have been our second touch, and then this would have been our second touch at the bottom. So anything after this you are looking to execute. And remember, I always say that a market is simple, moving in between two zones, and all we have to do is to look for ways to capitalize as it is moving from one zone to another. So as you can see here, we've just hit the support structure, so now we're pushing to the top side. So as soon as the market gets to this level, this is where we have anticipated a short like this. We anticipate a short, and then we make sure that we put our stop loss above, right above our structure here, looking at this candlestick here, and that will be above our resistance level, and then we would target this support structure here that we know that is normally a respected majority of the time. Okay, and as we can see that we had a 8 pip stop loss, and we had a take profit of a 67 pips here, even though we didn't reach the exact target, but you can see that we easily made 60 pips just like that. So that would be your first 50 pip of this movement. Okay, and this took only a day, so you would have caught this 50 pips, and then after that we wait again, either for the market to come to this area or to this area, and then from here we see that the move, it went back to that resistance structure. Once again, you do the very same thing because we are still within the consolidation here. Okay, as you can see as well, we were able to squeeze in here a 6 pip stop loss, and then our target is the same area, which is our previous support structure. And as you can see here, we were able to hit that structure, and that would have been your easy 100 pips while the market is ranging in between two zones. And you would continue to do the same thing once the market hit the structure again. You'll also be looking to execute a buy in this area. You target your resistance structure again, and then our stop loss will be below our lowest structure here, and that will be the structure here. Okay, as you can see, we have a 12.5 stop loss and the take profits of 68 pips, which was easily smashed, as you can see here, just like how it is displaying. And that's 150 pips that have been made before the market even move into um a a proper trending market. Inside the consolidation, you would have been able to beg yourself 150 pips just by making use of this consolidating structure here. So that is how you could have used the consolidation to beg yourself an easy 100 pips. Okay, we were also looking at this consolidation, so we're going to make use of it as well here. Okay, and another thing, always remember that a consolidation won't always be it won't always be clear, just like how we were doing on a okay, let me just draw so I can explain correctly. You can see this one, it is it is not straight like this. As you can see, this one has like is easy to spot your supports and your resistances, whereas from the one above this one, which is your actual price action, is it's rigid, it's not as tidy as this one, so it won't always be tidy. What you do is you make sure that you cater for most touches on your trend line. As you can see here, it touch here, it touch here, it's also touched here, respected and respected here before it broke the structure. And if we look at the top, you can see that we also have it respecting the structure here, fake out here, and then came back below, respecting the structure, the structure. And also make sure that at the back of your mind, you always consider these as zones, not just a single line, as we are drawing the trend lines like this. You always consider them as zones, not just a single line. So as you can see, this is the consolidation that we had here. Okay, and then this would have been our first touch, fake out. Okay, we consider this as our second. This would be our first, and then our second here. Okay, so after here, we are looking to execute our trades either when the market pushes to your resistance level or to our support structure. Okay, and we can see that this was the first point that the market reached, so we could have anticipated a buy here, and then our stop loss would be below our previous lowest low, which is where the market reacted. Okay, so we can see that we had our stop loss here, and that's a 9 pip stop loss, as you can see. And then we would target our resistance level, which happened to be 72 pips away from our entry. And as you can see, we had our market pushing from here all the way to that 66 pip, and that would have been an easy 60 pips inside a consolidation. And then once the market gets to a resistance, we are also looking for shorting opportunities as well. And once it gets there, we would anticipate our entry here, and then our stop loss are right above the structure here, which was our fake outs, and that would have been our 28 pip, and then our take profit would have been a 86 take profit, which was matched just like that. So that is how you make use of the consolidation phase in order for you to capitalize on an indecisive market. You can have yourself an easy 100 pip on a daily basis. Yeah, and then just make sure that whenever a market reaches a significant structure, you always make sure that you look for proper price action before you jump into your trade. You want to see momentum being lost as the market approaches a significant structure, and you want to see rejecting candlesticks. Like here, you can see that once the market reaches this area, we see a rejection candlesticks, momentum loss before we take the opposite direction. And here as well, you can see rejecting candlestick, momentum loss, and then the gain in a bullish momentum, and then the market pushes up. Every time that the market reaches the structure, we see rejection and an increase in the opposite momentum to the upside. Same goes for the resistance level as well. As you can see, we were all having green candlesticks here, and then we started having red candlestick here, and an engulfing bearish candlestick in this significant area, which would have initiated your entry point as you were anticipating a push to the downside. With that being said, don't forget to subscribe and like the video, and we'll meet again on another video.